Let's connect with Sanjiv Bhasin, who's joining in on the show. Sanjiv, hi there. Let's talk about the overall trade setup then, given that we are looking at mixed cues from the Fed, the fact that FII participation isn't too strong, and there's the pre-election sentiment that's very evident. Yesterday, you were alluding to the fact that there will be a correction. Give us a sense in terms of the timeline that you're looking at. Could that play out after the next couple of weeks? Is it going to be very deep or sporadic in nature?
Yeah, good morning, Avan. I wish I knew the exact timing. I would also be laughing my way. But I think all good news. You read the papers, you see the circumstances, you see globally. I mean, whatever the Fed had done, the market rebounded so sharply. And now you have a more positive thing with crude falling and commodities doing well, China well on its way back. I think IT numbers have been very well. Most positive negatives are priced in, so select stocks will do well. But I still think this consensus bullishness, particularly in the mid cap and select pockets, is seeing a lot of froth because any and every fund manager is now bullish. So I think the end result will be that you are so overbought. Any sharp correction for any reason will see more of weakness. I expect second half, maybe the second week of May to be where 8th, 9th, around that period, where some of the other earnings will come in. Until then, you have to be more stock specific by hedging yourself. We still think there is 100, 200 points upside, but you don't want to time it to the last extent of reaching 23,000 and then seeing maybe sub 22,000 coming very fast. So be cautious, take some money off the chips, wait for big events to play out. Large part of the good news is already in the price. However, like we said, we always have stocks which will make money. So here are some portfolio returning ideas which we can give you.
Okay, we'll be getting to that, but I wanted to get in your take then on Bajaj Finance with respect to the RBI lifting curbs. This is a positive catalyst for Bajaj Finance, right?
Yes, Avan, rightly so. I think it happened in November, middle of November, and RBI has given them enough time. Now they are satisfied, and that's happening against a whole host of companies. Everywhere you see the RBI is pointing out the flaws in the system for whatever reason. Like I told you, KYC norms have to be adhered to with IT back office. Being more able enough to handle, and the sheer volumes are going to be there. So Bajaj Finance is the numero uno as far as NBFCs go. And if you saw what the numbers from Chola is, I think Bajaj will be up and running. So definitely Bajaj Finance should be bought now. And if you have been accumulating in this correction, then I think Bajaj Finance will be one of the outperformers in the near term. The near term catalyst obviously will be this news flow, but I think we will wait for more quarterly updates and what the impact will be. Overall, it's a big positive for Bajaj.
Sure. Sanjiv, morning firstly. Bajaj Finance could do it in 5.5 months and sort out their kitchen. You think that kind of hope could be pinned on Kotak Bank as well, and maybe the worst could be behind us? Could that be a hope trade?
Good morning, Aisha. I definitely think so. These are not 2-year-old companies or 5-year-old. They've had these are seasoned brands which are there, and their core businesses are very, very sound. They have a footage across the globe, particularly more India centric, and I think the resolutions will be even faster. See, the RBI is just pointing out the errors which are normally there when the markets are so highly priced, and it wants caution on the side of both the corporate and for the investors. I think RBI is doing a tremendous job over there. And I think Kotak's resolutions will be much faster than we thought, because their points of error are also not as much as an IT background and upgradation of certain things. So I would think that also will be part and course of how fast they can resolve those. And hence, I think this all bad news is getting priced into Kotak. I would strongly recommend a SIP to be done in this stock if you want to play one of the best private banks which has had the most stable NIMs and asset quality.
So Sanjiv, you were just alluding to some ideas that our viewers could work with as to what to make money in this market with. So let's have some of your stock ideas.
So Aisha, we've power is what is shining, and If you recall, when I came to you in September, October, I recommended JP Power, which was down in the dumps. The stock is now up three times from there. It's up, the market cap is about 12 and a half, 13,000. Reliance Power was another. And I think my latest find is a company called Ratan Power. 2,700 megawatts in Maharashtra, Amravati, Nasik, and their NCLT resolution is very much on the cards. They have very, very able investors like Goldman and Vadre investors. And I think that the sheer weight of the asset is going to be very, very strongly added because power demand is across the board. They are one of the largest power generators. Now at 9 rupees, it has a 2,700 megawatt and a market cap of 4,800. I surely think this is going to be a doubler in the next 1 year. See, some of the stocks which we may have recommended or are suggesting have had a bad timeline because of overruns on cost issues, but power is shining across the board, and you cannot but ignore the sheer value of what they have on the table. So this is one of my top picks. I think you could get double your money or maybe even more in the next 1 year. Second pick would be SAIL. I think SAIL is going to be the key beneficiary of rising exports, China's comeback, and steel prices are going to be in tandem. The numbers this quarter may be very, very strong. So I think SAIL is headed towards 190. As a caveat, both these are in our portfolio. Third stock is Coforge. Now, Coforge has had no founder, and I think the reason for that was that they are in the merge of merging their business with the new acquisition which they've done. I think that acquisition is extremely positive because there's a market cap of 4.5 and an earning of 15-20 times which they are paying at EPS. I think that creative inorganic growth which they are aspiring for can see a re-rating of Coforge. Most people are negative, but I think negatives are already priced in. The stock has corrected somewhere from 6.5 to 5,000. I think this is the time to buy Coforge. This becomes one of the best takeover targets, and I won't be surprised if you hear someone come and pick up this company because the sheer weight of the businesses which they have, there is no promoter with more than 2.5. The private equity investors have already exited. I think this is a very good takeover target. I don't rule out 5,500 coming in Coforge in the next month or so.
Okay, there you have it. That's the view coming in from Sanjiv.
Let's just take stock of what else has been happening in the market. You know, we've been highlighting as to how REC, PFC have been hot favorites. Sanjiv as well has been alluding to both those names, and Ratan India Power is another stock idea that he gave from within the power pack. But Godrej Properties, that as well, after the split in the Godrej firm amongst the family, that 3,000 acre plot in Vikhroli that they have in Mumbai, that came under contention and moves out of Godrej Properties now to Godrej and Boyce. Yesterday, of course, sentimentally, the stock was a little bit lower. But Sanjiv, for a bull or rather raging bull market sector like realty, you think yesterday kind of opportunities are the opportunities that one should buy in, or would you say avoid Godrej Properties right now?
So Aisha rightly said, Godrej has been one of our star picks all the way from 350, 1,200, 1,500. And it was a no-brainer given that any product launches in Bombay was seeing exceptional takeoff. In NCR, they are one of the biggest players. But I think now with this, I have not read fully the split of the business because what happens is Godrej Property will now develop it and get a percentage. Previously, they were the largest landowners the whole of Vikhroli. Now we will have to dig deeper into what the split percentage comes for Godrej Property. I think in the initial deal, it seems that it would be slightly negative because now if they are only going to execute, then the margins which they had as a property builder will definitely fall because they own that. In the meantime, if you are looking for real estate, I've been telling you, India Bull Real Estate is a no-brainer. Given that they are sitting on inventory of 2008, there is no further surcharge, and the development once they get through with it because of infusion of capital, the returns will be phenomenal. So I expect this stock to be more than a doubler in the next 2 years. And if you are looking for real estate, then the best parcel, particularly in Maharashtra and NCR, actually belongs to India Bull Real Estate. I would definitely give a thumbs up to India Bull Real Estate over Godrej because the potential of doubling from here on this stock is much, much more than maybe a 20% upside in Godrej Properties.
India Bulls Real Estate, in case you're looking for a stock within the realty pack. But Sanjeev, in terms of earnings, the standout performer has been Dabur, and we were just digging through the details of their conference call. While the management indicated that there are green shoots visible when it comes to rural recovery, but the fact that rural growth has moved from -5% to +6% currently, you think now the rural recovery has to be played?
Aisha, I think everyone's consensus trade is avoid FMCG or consumer durable and get into capex and construction. Those stocks are trading at vivid imaginations. 70 times, 80 times. I mean, these are pedigree company, ABB, Cummins, but the floating stock and the entry exit is very difficult. You hit the nail on the head. I think Dabur, Lever, Marico, in Nestle, these are trading at extremely cheap valuation, extremely attractive. And never have you seen consumer stocks, trade at these. It is the sheer weightage of trying to get into those high beta plays. I would strongly recommend a portfolio of these FMCG stocks, Colgate included. Buy some of these stocks; they can do very, very well. Marico, Colgate, Nestle are three of our top picks. We will understand more on the Dabur numbers, but like you said, I think the best is ahead because maybe pricing may not be as powerful, but their volumes are going to make up for that.
Fair enough. That's the view coming in on some of those other newsmakers. Meantime, I wanted to get in a check then on the charts. And Sony, given that we're talking quite extensively about PFC. Okay, Kunal, let me get in a take from you. Given that we're talking extensively about PFC, REC and the kind of momentum that has been building up here, what are the charts indicating?
So they're still very attractive. In fact, PFC is something which I recommended over the last 2 consecutive days, especially when the stock was inching towards a breakout, to that 420, 430 mark. So a stock which went into a correction in the month of March. At a point, I think we saw the PSU basket as such correcting by a margin of 15% broadly. PFC, REC were the ones which corrected more than 20-25% in that kind of a scenario, and they are the ones which have made a very strong comeback. So it's almost like a V-shaped recovery when we look at the last 2.5 odd months of price action for these stocks, and I think that's the remarkable nature of these names, because when you look at the prior history for these stocks, it's not as if that these stocks have gone through a very subtle uptrend. The uptrend has been very sharp, very vicious for these names. PFC rising up from a point where I think the stock had started off into a breakout mode around the 100-120 odd mark in 2022 second half, 23 in early part. So I think from there on the stock has looked very strong. Mild corrections, 20% correction, I think seems to be a good enough zone where one could look to buy the stock. After 2 days of strong price uptrend, I would believe that now the risk reward is a bit skewed to initiate fresh longs. But I think in case if there is any kind of a mild correction, say a 3% to 5% odd correction for these stocks from their yesterday's high, that should be taken as an opportunity to build positions more.
Okay, fair enough. That's the view coming in on how some of those stocks are trending in trade. Sanjeev, on that note, thanks so much for joining in and sharing with us your thoughts as well as fundamental ideas. Have a super weekend.
If you like this video, then like, share and subscribe to ET Now.